and welcome to this special episode. I'm Ritu Singh and we continue our coverage of the three-day-long Global Fintech Festival that was held in Mumbai. Now, on the sidelines of this event, I caught up with angel investor, entrepreneur, and now the founder of Cred, Kunal Shah, who spoke about what the key growth drivers for the coming year are going to look like. He also spoke to us about what the path to profitability will be like after reporting losses of nearly 1,400 crores for FY23, their last disclosed numbers. There was a whole lot of conversation around their marketing strategy and why they are investing into, this customer acquisition cost, why the focus on only the affluent segment of the society, all that and a whole lot more in this freewheeling conversation with Kunal Shah. Take a look. Kunal, thank you very much for your time here on CNBC-TV18. I think the first question, and I ask this on behalf of many people that follow you, is, what really is Cred? You started out as this rewards platform for, incentivizing people to pay their bills, pay their credit card bills, which is the large part of your business. But then you acquired a wealth management company, Kuvera. You have travel experiences on your platform. You have e-commerce. You have automotive services. So what really does Cred aspire to be? And, for us to understand it more financially, what is the revenue split between all of these businesses?
First of all, thank you so much for having me over here. Cred is actually a fairly simple business. We started with a very simple mission that we need to recognize and reward the credit worthy for their good financial behavior. So when we started Cred, the credit card bill payments is what area we focused on, because we noticed that while a very small percentage of India actually owns a credit card, uses a credit card every month, but there seems to be a challenge in terms of trying to be more diligent about payments, making sure that you don't incur any interest charges and all of that. So we wanted to make it extremely easy to go after that set of customers, which also happen to be the most affluent set of customers for the India, right? So what we did is we used that to build our distribution, right? But because we focused on these customers, we started building all the services that they would desire, which most other platforms may not be able to offer because they try to serve a large masses India, right? So what happened is that because we focus on the top 25 million households, approximate unique customers in credit card every month would be 25, 27 million customers. And we wanted to just focus on them and build more things for them. For example, all the things that you talked about came from, hey, I have got this customer base, should we potentially look at their lifestyle and say a store or travel? And what we could do is, because we were able to kind of bring a high quality audience, we were able to get great deals for them on store, great deals for them on people trying their new things. For example, our store does not have a search because it's a discovery platform for a lot of new brands to launch with us. And many times people discover great D2C brands because it comes on Cred first, right? Same thing for travel. A lot of hotels are able to offer us some unique, opaque deals because they are serving a certain customer versus kind of creating a more public deal as such.
But you call yourself a fintech.
I don't know if I'm just in a fintech festival. I think I would say we are more of an audience play, a platform that is for the credit-worthy customers and serving all the needs that they have. Internet companies, unfortunately, do not really apply with label. So far, it's a little bit like saying that it's like saying we are defined by how we make money. That's not how life should be. We do multiple things. We make money on a few things, right? A lot of times we are a lot more than that. And we just happen to make money on the fintech side.
But let me get to the money to ask you, because we're trying to put you in a box to understand.
Sure.
What is the revenue split between these various businesses? What are the fastest growing legs?
Yeah, we started monetization. We are a 5.5-year, 6-year-old company. We'll be 6 years old in November. We started our monetization just a little over 3 years. So our first intention was to kind of focus mostly on the payments part of the revenue, which was a core to the business, which we have done through a lot of merchant tie-ups. And then we have also done distribution for BFSI products. So we do distribution for personal loans, distribution for insurance, and we plan to do more and more services that any bank or any insurance company are able to offer to these customers. But what we do is try to create a much more frictionless and magical experience working with them. Our intention is that these customers do not like getting bothered too much, right? The first principle we had on, let's say, doing business of personal loans was a policy of never ever calling the customer.
Okay.
Right?
No harassment.
And what happens is that it's not that I'm against taking a loan. It's just that I'm not interested in getting 25 calls and 50 people annoying me to trying to cross-sell something to me. So as a principle, we are trying to build for the audience that actually is interested in financial services, but in a more frictionless, seamless, also a more DIY approach of doing things.
Okay, you haven't given us the revenue split per se, but clearly the focus
it's largely on the fintech side. We have only launched a few revenue products. We are starting to doing more things.
Fair enough, fair enough.
We recently launched car insurance on our platform with Garage that we launched recently. We are doing some work on personal loans. We are also doing some work on payments. We have a store platform. So it's early days. The revenue, like I said, we are a 3-year-old company with the burden of a company which is 20-year-old in expectations of stuff we're doing, but I think we are focused on the right customers. Thankfully, these are the exact customers that are monetizing well across all the platforms. If you look at all the reports or public markets, the affluent segment of India is spending quite well, and I think the growing segment. So I think for us, that's the focus area.
You've never wanted to rethink that strategy of focusing very much on this affluent customer base, 750 CIBIL score and above. These are people that already probably have multiple bank accounts, people that probably already have many fintech apps that they're using. Do you expect the customer base addition that you have to stagnate if you continue to focus on that? Will you rethink it, or do you think, this is what Cred is going?
It's a great question. I think when we started the journey, there used to be less than 18-20 million credit cards in the country. Right now, we are going to touch close to probably 100 million number very, very soon. We all have to believe that as we go towards a Viksit Bharat journey, there will be more affluent customers than non-affluent customers, right? So if you take a view from a time perspective, 20 years out, like this is a cohort that will keep growing. Why should we focus on this? I think focus allows businesses to do right things. A lot of times when we try to focus on many, many customer segments, especially as an internet company, you become nothing for everyone eventually because you're trying to be everything for everyone.
Well,
right?
some of the companies we see here, you think they're nothing for everyone. A lot of them focusing on the masses.
It's about focus. The word is focus, right? Yeah. I believe that when you focus on a few things, it allows you to really go deep into those users' needs and focus on them. For example, if I'm trying to create an international vacation experience, right, it will not make sense to me on 20 million customers who are traveling quite frequently. Yeah. So the idea is that when we are focused on this segment, and I'm not saying that there is enough fintech innovation happening. My previous company, FreeCharge, built for the masses. Yeah. It was one of the earliest payments companies back in the day. Yeah. It's just that we believe that this segment is served well when it comes to the services being offered to them, but not in the way the experience is delivered to them.
Got that.
The reason is they don't want to speak to somebody on the phone. They don't want to going to a physical location to do some work. They would love their life to be absolutely on their phone and ideally never get a call. So,
at what pace is your customer base growing? Because we understand you're at about 14 million. Has this number increased much?
Yeah, it's growing quite decently. We were in the 8-10 million number just a few months ago, few quarters ago, and we have a national limit or number of customers that we really want to go for. So I think the way to think about affluent customer businesses is that it's not the customer growth. We are not chasing these hundreds of millions of customers out there.
Spend per customer?
It's about spends per customer, right? Okay. So that is growing quite decently. We believe that we will probably be, compared to most fintech platforms, we'll probably be at 10x, 12x in terms of, let's say, revenue per customer, right? And I think that's the metric that we will be really focusing on.
So, at what pace, again, is that revenue per customer then growing if you're looking to go deeper into servicing?
Quite aggressively, and I would say that while we have just launched a few monetization products, we have seen extraordinary growth on revenue per customer that is happening on that. But as we launch many more products, so just to put a perspective, right, imagining this customer to, let's say, the top 25 million customers, if they end up at $30,000, $40,000 income per year, expecting in, let's say, 10, 20 years, $1,000 ARPU or $1,500 ARPU from that is not hard to imagine, right? Okay. So I think that's the way we think about our business, sure. and we are constantly layering more products that serve them. The thing about what people kind of misunderstand is that when you're trying to create multiple services too quickly, you need the user to also evolve and understand things. For example, we launched a product called as Garage, which was making it easy for you to manage your cars on our platform. It was this unusual product that came and said you can set up your car and check your challan and insurance and all of that in one place. And suddenly we have like probably 6 odd million vehicles now on the platform that is being managed. And then we are just about launching insurance slowly on top of that and build more things on top of that. So I think internet businesses have a very unique tendency to build distribution and engagement first, and then layer on monetization on top of that.
You know, but to get this engagement, to get to more customers, get them to spend more, you're also heavily spending on marketing. I think I wouldn't be wrong to say you perhaps spend the most among the fintechs on your marketing. What has that meant in terms of customer acquisition costs? Because that directly affects your bottom line.
Perfect. When you are trying to build a platform where you're trying to make consumers do large value transactions with you, and you are a new brand that has come into the play, marketing plays a big role to demonstrate that you are a serious player, you have a credibility behind you, and advertising and marketing early on plays a big role. In free charge, we advertise much later on, and we realize we should have probably advertised earlier. In matters of money, trust is extremely important, and marketing early on helps you really establish that you are a credible player. Cred is probably rated as one of the top brands, top 100 brands in India now by the virtue of doing some of these activities early on. And it's not something that you have to continue doing anymore. Like marketing spends will automatically come down every year. The point is that you have to establish in this segment, because when it comes to affluent customers, they want to look at a brand that seems to be a lot more credible and solid and relatable to them. Right?
So customer acquisition cost for you, has that trended down with the marketing spend?
It's gone down consistently. I would say that we acquire affluent customers at fraction of a cost to most other companies, be it fintech or non-fintech, because of the early investments in the brand.
You know, but that said, your last publicly disclosed numbers, about 1,400 crores of operating revenue, but also 1,340 odd crores of losses. What is the path to profitability? Because at the end of the day, you do have investors, you know, who will look at an exit, and this is an important metric that the industry wants to track. So, you know, what is that road to profitability?
When a platform company of internet is built, it always starts with large amount of investment that we do to build distribution, build products. For example, many of these companies, 50% of the team works on products that are going to still be shipped versus are currently monetizing in some ways, right? So I think that's the balance that we have. Fortunately, we have a set of investors who actually believe in everything that we are doing, and we have enough cash reserves to
about 2,000 crores. Yeah.
I mean, I'm not. I mean, you're keeping track. I'm not. So the thing is that I believe that we will continue to maintain that path to kind of go in the opposite direction. But the internet businesses, if you see, all the businesses that have turned profitable internet businesses were deeply loss-making not many years ago. The operating leverage in internet companies is actually quite powerful. But I think when we see them in the investment phase, they look like just loss-making companies, but that's the peculiar trend for every internet company that exists.
So you're not expecting to turn profitable anytime?
We are, obviously. We're not a business.
When is that?
I mean, I'll let my board be knowing about that first before I tell you about it. But the thing is that in a few years, yes, we have to kind of turn profitable. But we believe that the investment right now is making a lot of sense. We are getting the ROI much more faster than we could ever imagine.
Speaking of investments, a new area for you has been the UPI payment space. You know, it is, you know, all said and done, dominated by two players that control more than 90% of the market. Do you think you can make a dent, and what sort of investments would that require?
That's a great question. First of all, it's important to talk about why we did UPI. One of the things that we noticed that credit card customers, which was our focus area, earlier did not use UPI as much. They were doing like less than 2 transactions a month when we started Cred. And suddenly it became like 27, 28 transactions per customer on UPI while they spent so much on credit cards as well. So what we noticed is that it's important for us to be offering a complete service for them, and we started our journey on that. So when it comes to making a dent, because we are focused on a customer segment, the impact may not be to the scale of what UPI is. UPI serves 400 million, 450 million customers right now. We are focused on a small set of customers. So I would say we will definitely make a large dent on the customers we serve.
Okay.
But not on the
same
UPI.
philosophy. I get that, but what about credit on UPI? Is that something you're exploring now that you have co-lending partnerships with Yes Bank, with L&T? Are there more in the offing?
Yeah, so most of these partnerships are towards our personal loan thing that we have already have. I think we already work with a few banks. We are partnering with a few more banks. Our model has always been simple. We are a distribution platform for banks, NBFCs, and we continue to just keep adding more and more. What has happened now, because we worked with a few banks and demonstrated our ability to do large-scale business with best quality. We probably are the best fintech in terms of quality of book that they can source from any fintech in India.
We don't know that.
Well,
Yes.
that's why you'll see more banks coming to us, and the more higher quality banks coming up constantly, because naturally they are looking for a good source of customer acquisition, right? So I think that's what is playing out right now. We'll see more and more banks. Some of the larger banks are also in discussion stages with us, and we'll see more of these announcements coming in the next few quarters.
You know, finally, because this is something we've been hearing from almost every fintech founder we've been speaking to, is this regulatory overhang, because, you know, the innovation is very fast, and therefore the regulators also coming up with new guidelines to sort of put guardrails around this growth so that the customer is protected at the end of the day. To your mind, in the businesses that you're in, how big of a risk do you see that is, and, you know, how are you ensuring that compliance remains the top priority even as you continue to innovate?
Yeah, I think it's a great question. First of all, this is my 16th year in markets which are doing to financial services. So what happens is that one understands the role of regulator, understands the role of what your company's governance and compliance should be doing much more in a more mature manner than most younger companies understand the thing. You have to understand that we have to build responsible growth. Otherwise, we'll kind of take one step forward, two steps behind, and that's something that will hurt the entire economy, including the fintech sector. So I think all the regulatory stuff that has happened is to kind of make sure that the guardrails are causing the growth to be sustainable and of the highest quality. A lot of times these actions are felt in a certain manner because most people do not understand the role of regulator very well, or understand the role of what fintech should be doing quite well.
Or there is innovative interpretation of some of the rules.
I think a regulator has been very approachable. Now regulator also has a session where every 2 weeks you can reach out to them, clarify things. So I think it's unfair to say that there is room for innovative interpretation when you can actually go and ask and clarify every single thing. What we have found to be useful to us is to constantly engage with the regulator, constantly let them know about everything that you're doing, and take their guidance consistently.
So you don't see it as an overhang?
I don't, because I think I've spent enough years to understand that when a regulator does do an action, they are trying to ensure the system is much more resilient. We have to understand one thing, that ultimately all the fintechs will win if the entire sector in the economy is absolutely solid.
Well, on that note, Kunal, it was a pleasure speaking with you. Thank you very much for your time today.
Thank you so much.
Okay, so that was Kunal Shah of Cred. But on that note, we have to take a short break. Don't go anywhere. We're back in a moment.